I used these 3 simple steps to own over 100 rental units in Johannesburg, South Africa without having millions in my bank account. But when I started, I had no roadmaps and almost made costly mistakes. Most people believe you need millions to invest in property, but that's a lie. The truth is, you can start with far less if you know the right steps. And today, I'll break down exactly how to build a profitable real estate business in South Africa, whether you're a complete beginner or looking to scale beyond your first home. Here's the mindset shift. Think of property investment as running a business. Your properties are your income-generating assets, and your tenants are your customers. The more strategic you are, the more profitable your real estate business becomes. If you've ever thought property investing was out of reach, this video is going to change that. Alright, let's dive in. Before we even begin talking about buying property, let's get real. Imagine this, you can own a property that generates income every month while someone else pays off your bond. Over time, your property grows in value and you reinvest in more properties without needing millions in your bank accounts. But here's the catch. If you don't have a clear strategy, you could end up with the wrong property, bad tenants, or even financial losses. That's why step 1 is crucial. Before you even look at listings, you need to know your why. Why do you want to invest in property? Be honest with yourself. Are you looking to build long-term wealth and create generational financial security and passive income to supplement your salary, plan for retirement and financial freedom, escape the paycheck to paycheck cycle? For me, my wake-up call came when I realized that jobs don't offer real financial security. Many people work for decades, yet still struggle financially. That's when I understood that owning income-producing assets, not just working for money, is the real game changer for financial independence. Drop a comment below. Why do you want to invest in property? What do you bring to the table? Before you start investing, you need at least one of these. 1. Some capital. You don't need millions, but you need at least a plan to fund your first deal. 2. Time. Researching deals, learning, and managing properties take a few hours a week. 3. Willingness to learn. Property is a skill. The more you learn, the better it gets. Here's the truth. If you wait until everything is perfect, you will never start. Work with what you have. How much do you really want this? Have you left yourself no possible way to retreat? How bad do you want to succeed in property investing? How big do you want to play the property game? Have you fixed in your mind the exact amount of money you want to make? Are you backed by persistence that refuse to accept failure? Here's the truth. Wishing alone won't bring financial freedom, but desiring success so intensely that it becomes an obsession, combined with definite action steps, will lead to wealth and financial freedom. Drop a comment below. Are you ready to commit 100% in your property journey? Type I'm all in. I get this question all the time. Ekow, where should I invest in property? The truth? There is no one-size-fits-all answer. The right location depends on your strategy, your budget, and what kind of investor you want to be. I highly recommend starting locally because 1. You know the good and bad areas in your city. 2. You can visit properties before making a decision. 3. Managing a property close to home is much easier than trying to manage something far away. Rule of thumb, start within 2 to 3 hours drive radius of where you live. However, if you live in an expensive market like Cape Town or Sandton, you need to look at surrounding suburbs where prices are lower. Look at secondary cities like Port Elizabeth, Polokwane, or Bloemfontein for better returns. Want to know how to achieve financial freedom? Comment, mentor me below and book a free 10-minute strategic call with me. I will select a few people where I will help you figure out how to become financially free through property investing, even if you are broke. Link in description. You've got your investment goals clear, but knowing your why isn't enough. You need to make sure your numbers work, because if the numbers don't work, the deal doesn't work. Let's dive into step 2. Learn the basics of property investing. You have to know how to analyze property deals, calculate rental yields, and make sure your investment is actually profitable. Stick around, because I will also show you a real-world example of how to make 1 million work for you every single month. So, here are the basics of property investing you need to know. Number 1, how to analyze property deals. You must know how to calculate rental yields and cash flow to ensure your property is profitable. Number 2, return on investment. If you are putting in money, you need to know how much you are getting back. 3, key terms. Learn concepts like gross yield, net rental income, loan-to-value ratio, and capital appreciation. Number 4, how to increase property value. One of the best strategies in South Africa is to buy below market value, renovate, and increase rental income. There is a lot more to property investing than I can cover in one video. Want me to break down ROI, rental yields, and how to analyze deals in more detail? Drop a comment below and tell me what you want to learn next. If enough of you ask, I will make a deep dive video just for you. Let's break down with a realistic example. You buy a 3-bedroom house plus a cottage for 1 million. You put down 10% of 100 million and finance the rest with a bond. Your monthly bond repayment is around 9,200. You rent it out for 14,000 rand per month. After rates, insurance, and maintenance costs, your total expenses come around 11,500. You are now cash flowing 2,500 per month. What does this mean? 1, your tenant is paying off the bond while you build equity. 2, in a few years, your property appreciates, giving you capital to invest in another deal. 3, if you reinvest your 2,500 cash flow every month, within 12 months, you would have 30,000 rand saved. That will be enough to serve as deposit for your next deal. Now, imagine reinvesting this 5 to 10 times. This is how smart investors snowball their wealth and turn property investing into a business that runs itself. Know someone thinking about buying property soon? Tag them in the comments and send this video to them. You might save them thousands. You know how to analyze a deal, but here's the thing. Even the best calculations won't save you from making costly mistakes. So, before we jump in, let's go over the biggest mistakes new investors make and how to avoid them. Here are the 3 pitfalls to avoid. Number 1, falling in love with the property instead of the deal. It doesn't matter how beautiful the house is if the numbers don't work. Buy based on cash flow, not emotions. Number 2, ignoring location risks. You can fix a bad property, but you can't fix a bad location. A cheap house in a high crime or low demand area will cost you more in headaches. Stick to high rental demanding areas. Number 3, believing in unrealistic projections. Some sellers will sell you future rental income potential. Don't fall for it. Buy based on today's real numbers. Pro tip: many beginners underestimate maintenance costs and vacancy periods. Make sure you've set aside at least 5 to 10% of your rental income for unexpected future expenses so that your cash flow remains positive. Also, make sure your rent covers your bond payment, even if interest rates rise, or make sure you have a backup plan for vacancies. Additionally, banks typically only finance 80% of the new value, so always factor that in before refinancing for your next deal. Watch out for interest rate cycles. South Africa has seen interest rates increase significantly in recent years, so always calculate your cash flow at a slightly higher interest rate than today's interest rate to avoid surprises. You've made it this far, and now you know what mistakes to avoid. But here is the thing. Avoiding these mistakes alone won't make you money. You need to take action. And before we get into that, let me share a personal lesson that have completely changed the way I invest in property. When I started, I almost fell for a future rental income potential trick. Luckily, I checked the real numbers. Always verify and don't trust what a seller promises without proof. If you are watching this and thinking, wow, I wish I knew this sooner, imagine how many people around you need this information too. Hit the share button now and help someone else avoid these costly mistakes. Step 3, take action. Now that you understand your why, what, how, and where, and have a basic understanding of property investing, it's time to take action. 1. Start analyzing deals. Look at property listings, compare prices, and analyze deals in your area. I have a video on how to analyze deal in under 5 minutes. Watch it now. 2. Build your team. Property investing isn't a solo game. You need 1. Bond originator to help you finance your deal. 2. A reliable real estate agent who knows investment properties. 3. A property manager if you don't want to manage tenants yourself. And 4. A reliable contractor, someone who knows how to keep your property in good shape without overcharging. Lastly, number 3, start making offers. The biggest mistakes new investors make, they spend years learning but never take action. Once you start making offers, you will quickly learn how to negotiate and get best deals. Don't wait until the market moves again. Prices keep rising. The best time to invest was yesterday. The second best time is today. Not sure where to start? I will personally help you analyze deals, avoid costly mistakes, and grow your portfolio. Book a free consultation. Link in bio. Every month you delay, you are missing out on potential rental income and property appreciation. The sooner you start, the sooner your money starts working for you. If your goal is to own multiple properties, you must learn how to use other people's money. Number 1, use your rental income from your first property to fund the next deal. For example, if you buy a property for 600,000 rand and you receive a rental of 9,000 rand per month, and say your total expenses get to 7,500, you are cash flowing 1,500. Instead of spending that 1,500, reinvest it into a savings portfolio so that you can use it for the next deal. Number 2, refinance a profitable property to buy more. For example, if you bought a property for 800,000 rand and it has appreciated to 1.2 million, you can refinance and pull out 200,000 rand. That's your deposit for the next deal without using your own cash. I have a video on how to buy property with no job or income. Watch it next. Number 3, partner with investors to scale faster. For example, once you have successfully concluded 1 or 2 deals, you can leverage off your track record to partner with others who can bring in capital while you bring your expertise. This is how seasoned investors build 10 properties within few years by using partners and OPM. Property investing isn't just about building one home. It's about building a portfolio that works for you. The sooner you can start, the faster you can scale. The market won't wait for you. The biggest mistake new investors make, they spend years learning but never take action. I challenge you, go to a property listing site and find a property. Run a rental yielding calculation using the formula I show you and drop your yield percent in the comments. If you are stuck, get a mentor. A mentor can 1. Help you avoid costly mistakes. 2. Guide you in structuring deals correctly. And 3. Save you years of trial and error. Now you have the 3 essential steps to start your property investing journey in South Africa. Want in-depth training? Comment, mentor me, and I'll send you details. Or book my free consultation, link in bio. What is your biggest question about property investing? Drop it in the comment and I'll answer in my next video. Now, don't be the only one leveling up. If you have friends or family who are interested in financial freedom, send them this video. Because the worst thing is watching someone struggling financially when you have the knowledge that could help them. Be a legacy builder. See you in the next video. Peace.